Hey folks, just wanted to come on here and man, this was a chop freaking fest, wasn't it? I just wanted to show you how you can use this system. We'll focus on NQ right now. I mean, this thing is just going everywhere. It opens, it just goes straight up. It comes to settlement. We push, we come back down, we go back up, we come down, and then finally we get a pinnacle. We get this higher high right here. Now, see, this was the previous higher high. We validated it, and then we pushed down and we swept liquidity. But then we pushed up a little higher here. So this first one, I don't think we got a fair value gap. Yes, we did. But the next candle after immediately violated it. So you wouldn't want to get in on that until you see this being respected. So then we push back up, creating this one as our last down close before the run up and our potential breaker. And then we finally get this fair value gap pushing beneath. And it stays, it's respected. You can see these trying to push up, trying to push up. You could try to join on one of these, or right here would be fine. Stop would have to go above this candle that formed the fair value gap. And that's what I ended up doing on this. My aim point was actually right here. It was just too clean, too straight of a line. Settlement has been quite a magnet today. So now I'm looking to get another trade to the upside, but we may not get one. When you compare this to what's going on over here with ES, I'm going to show you what ES's 15-minute chart looks like, because it is freaking nuts. Like all night long, it was just nuts. I think it's 4 p.m. So this is the open here. Here we were just chopping. This is the opening candle here. And we just kind of upped and down, went up, left all these highs, and then we started working our way down. Now, the 50% mark of the pullback of this big day, RTH wise, is probably around here, 77.20. But on the full daily candle, it's at 77.10. And I think that's our lower, where we're looking at there. But settlement line, it's kind of been a magnet here too. Maybe we go there. I don't know. But I want to show you, this is our peak right here. Same kind of a deal. If you're trading ES, this will keep you out of trouble. So here we opened up and pushed down first. Probably got a few people going off of that 1 minute candle. Probably got a few people going short. And then we offered up higher. We didn't take any liquidity up here from a previous day other than this one, but we offered up to settlement, kind of chopped around a little bit. And so at this point, we're not thinking, oh, I know where this thing, I don't know where I know where this market's going. It's going this way, it's going that way. We're falling out of bed right now. All we're doing is, okay, we opened here, push down, now we're going up. So as we're going up, we're marking the red candles. We make a new high, we mark the red candle. We're going higher. Those are all relative equals. So this is our low, our last down close before this liquidity sweep here. And then we come down, chop, make a new high, and we can move it. Every time we make a new high, we can move it. So then it would be here, and now we're here. That's our highest high. I think this one might be a little bit higher. It is. So you could, you could actually, if you wanted to move it up to here, that's fine right there. And then we wait. We wait for price to start closing below. Yes, we did. We got it closing below. We have a small little fair value gap right there. We just marked that out. We ripped away from it immediately, as you can see. Pulled way down here, took out some of this liquidity, and then we came back to settlement. Everything seemed hunky-dory. We're going to go just fall out of bed. And then we got into another chop fest. We didn't even take any of this liquidity. Maybe we took that one. Looks like we took that one. Let me see. No, we didn't. We left that liquidity. We run back up. Looks like we're going to the moon again. Get above settlement. We try to work into this little bitty fair value gap right here. Let's say this one is the one that it's playing off of more so than that one. And then we can see the candle bodies respected it. Now, you don't really know which one it's going to play off of, but I would mark that one for sure, and I would keep an eye on this one as well. And you can see we wick into it, but the candle bodies, they're staying down here. So you would be safe to get in anywhere on this fair value gap when we start pushing away again. I typically like to join at the bottom. That's at 755. But you would need to get up above here. Because that's 65. That's 25 points. Or no, that's 10 points. If you got in at 55, 10 points. So on one micro, that's $50. If you had 4, that's a $200 stop loss. So that's how you would get in on ES. And then here we just keep on going down. Now, as we're continuing down, we can move our little yellow line with us. We got a new low. So we're marking our red candles as we get new lows. Oh no, we're marking our greens on the way down. The green ones are the ones we mark on the way down. New low, green. Okay, here's a new low. What's our last green candle on this one? And how far do we push? We pushed to 24. Now, where we're going is not important. When you see a reversal pattern, meaning lowest low, the last green candle on the way down, a fair value gap above it, which we're forming one right now. Here it is starting to form. I don't know if it will be one when this candle closes. Okay, it is one. We got a fair value gap above the breaker. Will it be respected? That's our next question. I like to see the next candle after this to push all the way up, leave some of this liquidity, and then come back down. I don't like to see it immediately traded back through. But that doesn't mean it won't be respected. This could just be a wick. Let's see what's going over here. Okay, so that was our last potential breaker. Now we have a new low. We have a new potential breaker right there. And it has not been validated whatsoever. It looks like we're still just going to keep on falling and falling. And we may. We've already caught this move down. That was our aim point. So trying to jump in and get more downside here, I wouldn't recommend it. At some point, we're going to do a rip up like we did here just to run stops, and it's going to be painful for whoever's in a short position. They do that because that's the way they steal money. And believe me, the market makers are in the business of stealing the retail guy's money. So at this point, this is our last green candle on the push down. We're waiting for price to close above it with a fair value gap, and that fair value gap then being respected. Look at what's going on with the ES over here. We pushed up, we made this fair value gap. We wicked back down, but look at what candle bodies are doing. They're respecting this fair value gap. At this point, I would like to see it push a little higher, and I would like to see NQ looking similar. I want to see NQ showing similar price action, in fact, that it's validated its breaker and that there's a fair value gap to the upside. Just based on ES alone, I could put in an order to buy. I'll just put 4 on there, right there. And then the stop would have to go below this low. So that's $135 stop loss. And then we're not going to go complete reversal of the day here. But what we can do is, we know we're pretty much trending down right now, and we have these fair value gaps to the downside. So we could just go for the most recent liquidity sweep, which would be right above these wicks, or possibly even that wick. Now, I think this one is probably going to get smoked just because I'm watching NQ over here and it's about to make a new low. If it doesn't make a new low, then we might be okay. Time of day right now is not the best time of day to do this. It would be better to wait until New York time of 1:30 to start looking for these afternoon reversals. But this is just intraday liquidity sweeps, is what we're looking at here. And we have $90 on the profit and $135 on the risk. That's not a good idea either. But the only reason we're in this is we have a breaker validated with a fair value gap, and that fair value gap got respected 3 times, 1, 2, 3 times. Now we're kind of trying to push through it, but so far, candle bodies have not closed below it. See that? They still haven't. And so this has a good potential of working out just because of that little PD array right there, which doesn't mean much, doesn't look like much, but this is all algorithmic. It's not, it has nothing to do with being smart. It has everything to do with being able to recognize algorithmic um, signatures. And that's what this is an algorithmic signature. And when you see that, the small little fair value gap, even though it's really small, so now we've made a new low here on NQ. It means something to the computer. And that's what the price is being delivered by a computer. So here's our new breaker over here. And look what we've done. We've come down, we've made a new low here. We've made a higher low here. That's called a SMT. I'll draw them out so you can see them. An SMT is what ICT calls smart money timing. You see that there? I'll make it a different color so we won't get confused. We'll make it that color right there. And then over here, we got that business. So that's also lending to that we could have at least a liquidity sweep up here. And that's a volume imbalance there. That's also likely to get traded back into. Now we just had a candle body close below our fair value gap. I don't like that. When I see that, I'm like, this is probably not going to work out. But we'll let it play out. Because all we really have to do is make higher lows because we're beneath it. I do like the fact that we do have an SMT here. If we look at a higher time frame, this is a 1-minute chart. If we look at a higher time frame, the high of this 15-minute candle is a target. It's got 3 minutes remaining. The high of this one is even a target or maybe even the midway point, which would correspond well with the high. No, we're getting green. We haven't been very green on this one yet. So let's go back to the 1 minute and see. We haven't even validated the breaker over here on NQ yet. This is another reason a lot of people avoid this time of day is because it's chop freaking city. Look at that crap. Can you go sometime today, please? All right. So NQ is starting to work its way. Maybe it'll validate its breaker. Maybe it doesn't. Maybe it just tries to sweep this liquidity here, but it'll be enough to push ES up to its liquidity. Maybe that's what happens. And then we have more downside. Or maybe this is a reversal of the day. We don't know that. All we need to do is aim for the most recent swing high. And you can see, it's not a ton of money, but it's 95 bucks. If you can make 95 bucks a couple of times a day, you can make a living doing this. There aren't a lot of careers that make. Oh, we have another fair value gap forming here. That's even better. I think we'll end up offering lower for the remainder of the day, but we need to run some liquidity on the way down. Otherwise, the retail guys that just go short and walk away, they're going to make money without getting their stop hit. And that's not what the market does. It takes people's stops. The only time it runs one direction without ever looking back is when we're going on a higher time frame liquidity run. That's when you'll see those 1,000-point days to the downside or to the upside that never really have a significant pullback all day long. They're going somewhere. They try to make it look like there's some reason behind it, a news story or whatever. But no, it's big money saying, I want to buy right here, and I'm willing to buy 1 billion contracts or whatever it is, $1 billion worth of contracts. And you need to get the price there so I can buy it. And so the market makers are like, all right, we're in. We'll get it down there. And they just tune the computer to go that way. Bam. All right, there we go. It worked out. Isn't that amazing? Took forever, but this time of day, everything does. Now, this could be the reversal of the day. It is an SMT. I really doubt it because of NFP being tomorrow. I think we'll offer down to at least, I think we may even get to 7,700. A pullback just before we start ripping higher again would be a good idea. So that's it. I just wanted you to see how those things work. We could possibly, this may be the low, and then we work our way back up to settlement and just continue to range because we have been doing a lot of ranging. This is a nice push finally after being in this little chop fest for so long. And NQ wasn't much better. It was in this little chop fest range right here for a long time. And now we've worked our way into this fair value gap. I don't think we took that low, but maybe if we did, this could be it. Let's see. Yeah, I don't think we took it. The low here is 47 quarter. And this one's 48.75. As far as this fair value gap goes, it looks like we've respected it with candle bodies. No, we went through it. So I think this run up, your best idea here is um, consider this a liquidity run. And as we're running up, mark your last down close on the run up. We can get rid of all of this stuff. Well, that's that fair value gap I just marked. So you could do the same thing over here. Um, as we're running up, we just ran that liquidity. Start trailing your line the other direction. Because we just made that trade to the upside. I mean, I would stop there personally, but if we are going to offer lower, we want this liquidity run to offer a fair value gap to the downside, but it may not. Over here on NQ, that's our potential breaker to the downside. It's our last red one after running this liquidity, the last red one on the way up. And we finished this candle red. I like that. And so we would just need to see a fair value gap to the downside. Beneath that, I would prefer to see it make a new low before you try to get any more downside. A new low of day, and then enter at a fair value gap beneath here. So like we would poke a new low of day. I've got a few more minutes. I'll just see if it plays out. Time of day is not perfect. It's 12:30 New York. It's not horrible. I've seen a lot of stuff happen at 12:30 New York. Hmm. You know what? This is the last red candle for the highest high right there. And this is a fair value gap beneath it. And it's respected. I'm going to sell right there. And I'm going to put my stop right above this high. And I'm going to put my take profit at that 15-minute fair value gap low, which is right here, relative equal lows. It may go lower, but that's what I'm doing. Is there a similar thing over here? That doji is not red, but it did push down and then up. You can oftentimes use the bottom of this as your breaker too when it's a red candle like that. And there is a fair value gap here. So it's similar enough that this could work out. And we wouldn't even have to violate the SMT here for this trade to work out. All we would have to do is take out this wick on ES. $54 on the risk, $74 on the take. It's at a round number, a 50 level, pretty close to it, which is often revisited. when you're looking at fair value gaps, always include the volume imbalance. So this one actually is having candle bodies close above it, which most likely means we're about to lose this trade. You could still make a lower high, but we'll know here in a minute. Not looking too good. Now we've come back down to the breaker. We put up a fair value gap to the upside. I would say we're going to run some of this upper liquidity now. Possibly this one. At least that one. I don't have a crystal ball, so I can't say that for sure. But I like this. You can see a kind of a little shift in market structure happening here. So now we've lost. This is our breaker here. We already took that money. So if we would have stayed laser focused on longs and ignored anything on the short side, there's our fair value gap. When we came back down, we wicked into it. And this is the one we put for the downside. We'll get rid of that. But we wicked into it. Bodies respected it. We pulled away with another fair value gap. Entry would be right around here, provided that high didn't get taken first. Or you could just mark it in. We already pulled away. So then we would be aiming for at least this high. Could aim all the way to settlement and say this is as low as it's going today. I know I'm not going to take any more trades on. I mean, I guess it doesn't really matter if I do or don't. If I was going to enter one here, because we had a similar situation here. This is our lowest point. That's our breaker. We just now got above it with a fair value gap. So I would enter right here at 5. Maybe buy a couple of them. Oh my gosh, I hit the market. I don't want to do that. I want to do this. I want to do limit. I'll do 4. What the heck? And let me just show you where it is. So this is the fair value gap. Our breaker is not where this is. It's actually here. Right there. With the SMT and all, we stay laser focused on the longs. And then there's 2 fair value gaps here. What I do here is I measure how far is it to the low. And then I measure if we entered there, it would be 60 points. It's 250 on 4. And so the other one isn't too much difference. $50. So it's $200 on 4 to get below this low. And that's the way I would determine if I'm going to put on 4 or 3, depending on how much risk I want to put on. Because the likelihood of it taking out that low is high. So now we wick down into both of them, back to 500. And you can see ES is back into its fair value gap. Whether we go up from here or down from here is anybody's guess. But that was a decent PD array. Of course, we already took our profit over here. That's the way you would enter it. And I'm hearing lunch is ready, so I'm getting off of here. And then I would aim all the way for settlement here. Go to break even as soon as I got a little bit of room. and just aim for settlement. And that's a pretty good chunk, 862. I have no skin in the game. Did I measure that incorrectly? Is it saying that's $500? And we don't want to risk that much. I must have measured it incorrectly. All right, so I made a mistake here. I need to take off. Let's see, market. We're long, so we need to sell 2 of these. That'll only leave us 2 on. Because if you get down all the way below here, I did my math wrong. If it makes a new low, we're going to lose $200. You could probably be safe and put it here. As far as our breaker and our fair value gap, it's being respected so far over here. This candle right here could violate it. And you can see over here on ES, we came down, we wicked into it, respected it, but now we're offering lower, and we did take that high. So I don't know. This is I feel like we're offering lower the rest of the day. I don't think we're going to go back up. We could possibly go back to settlement during MOC, but I don't know. But I can't really trade that. I can't trade them maybe. I'm not willing to go short here because the price action isn't saying to go short. It's about to be saying that, but right now it doesn't say that. So all I can do is go with what the price action says. Based on the fact that we violated this fair value gap here, that's my let's get out of this trade thing. So I'm going to go ahead and kill it. It might continue up here, but we're not going to deal on maybes. This should have went. If it was going to go, it should have bounced off that breaker and continued up to one of these liquidity sweeps. So I would say we're going to continue lower now and do what I mentioned earlier. You could even, I would say low of day would be our potential breaker. You want to see it make a new low of day with a fair value gap to the downside. Try to get an entry at that fair value gap if you can, and just call it. I wouldn't mess around with that anymore. All right. Remember to be kind to yourself and be kind to one another. Trading is difficult and frustrating, and it can make you feel all sorts of ways about yourself that aren't true. So be very, very kind to yourself. Realize that this is a difficult profession, and if you want to get good at it, it's going to take a lot of mental strength. And some people come into the market equipped with that, and some people don't. And it has to be learned just like everything else. Your candle patterns, your mental strength, all of that has to be learned. And the psychological part is oftentimes the most difficult part to master. So thank you for watching. Talk to you soon.